welcome back, gang. So please welcome Ric Edelman to Money Talks. Ric is a best-selling author, the co-founder of Edelman Financial Services. He's been named the #1 financial advisor in the U.S. by Barron's. He's been inducted into the Financial Advisor Hall of Fame. Ric and his wife founded the Edelman Nursing Career Development Center in partnership with, I think it's called Innova, I was reading earlier. And of course, anyway, the list goes on and on. I was actually looking at some of your books earlier. I saw some books on kind of teaching kids about money and the basics of money. And so if you just do a search for Ric Edelman on Amazon, the list goes on and on and on. Well, welcome to Money Talks, Ric.
Thank you, Bill. It's great to be with you. And of course, my newest book, The Truth About Crypto, just came out 2 weeks ago.
Saw that as well, and I want to talk about that. But let me ask you first. You've seen a lot of cycles, right? What does this cycle, or what does the market that we're in kind of look most like to you historically?
Well, as you noted, there are a couple of items that are familiar, but also brand new. In the familiar category, this is the 7th time in Bitcoin's history that it has fallen more than 50% in value. So, we've seen this movie before. On the other hand, we haven't seen correlation the way that we have in the past 9 months. Bitcoin has always been a non-correlated asset or a negatively correlated asset. And that was one of the points of pride for folks in the Bitcoin community, saying that it's a wonderful addition to a diversified portfolio because it zigs when the others zag. That hasn't been true since last fall. And it has people worried as to whether or not that thesis still holds water and whether or not this weakens the argument for investing in Bitcoin. I think it's too early to tell. I think the jury is still out on that one. But clearly, part of the reason, perhaps the dominant reason for the correlation that we've been experiencing is because of the new institutional engagement. For the first 12 years of Bitcoin's life, there was all individual investors and initially, a bunch of outcast investors, anarchists who were trying to bring down the global financial system with this newfound digital money. And they were not at all engaged in the financial markets. Well, now we have some of the biggest investment entities engaging: endowments, pension funds, hedge funds, billionaires, major insurance companies. I mean, everybody everywhere seems to be starting to pay attention to this. And so last year, we saw even more trading by institutional investors in Bitcoin than we did retail investors.
Yep.
And so when the sell-off began on the stock market last fall, those institutional investors reallocating their portfolios and selling stocks, they're selling Bitcoin like they're selling NASDAQ. Their attitude is, we're selling everything everywhere all the time. And so Bitcoin got caught up in that, and it's therefore not got the non-correlation game anymore. Mm-hmm. Will that persist? Or will the institutional investors finally get the memo reminding them that Bitcoin's a non-correlated asset, that it has nothing to do with the stock, bond, or real estate markets, and that they need to start treating it differently? Time will tell. We'll wait and see. But in the meantime, most are considering this just part of the ongoing trend of what's happening in the global financial marketplace as we fight our way out of COVID and dealing with the war in Ukraine.